Good evening, ladies and gentlemen. On behalf of ASK Private Wealth, it is my pleasure to welcome you to the inaugural session of the Leadership Circle. Stephen Schwarzman and Rajesh Saluja.
Imagine sitting in the desk next to you is somebody who's got an IQ of 12,000. India is going to grow at extremely rapid rate. We're very bullish on India and have been since.
Few individuals have shaped the world of investing as profoundly as Steve.
Conventional wisdom in finance never holds for very long. And you always have to be alert. You can either get out of some things that are going to get hurt in that new world, or you can go into other areas. Hope is not a plan, right? When you buy public stocks, hope is a plan. You don't win with second-tier talent, no matter how much they want to win.
Good evening, everyone. It's an absolute privilege to welcome you all to this exclusive conversation with Steve, one of the most influential figures in global finance. Few individuals have shaped the world of investing as profoundly as Steve. From founding Blackstone with a capital of $400,000 to building it into a $1 trillion powerhouse, his journey is a testament to vision, discipline, and the ability to see opportunities where others saw obstacles. Today, we have the rare opportunity to hear directly from him his perspectives on the evolving investment landscape, the future of private markets, both India and globally, and the principles that have shared his extraordinary career. For our distinguished audience, India's leading entrepreneurs, investors, and wealth creators, this conversation couldn't have been more timely. The world is shifting rapidly, and understanding the dynamics of capital, private markets, and global trends is more critical than ever. So without further delay, Steve, let me get the ball rolling, and by asking you, number one, given the current macroeconomic environment and the geopolitical backdrop, where do you see the biggest investment opportunities over the next decade? And related to it, I'd actually like to start by saying that BX Global PE Fund, we've taken it to all our clients and we've received tremendous response. So how do you see those opportunities being targeted through this fund?
Well, thanks a lot for being here. You could talk a long time about that. And you all know, because you have to allocate capital. The world keeps having these step functions. I thought I understood it, until about 6 weeks ago. So it's changing. I guess there's some dramatic things that have happened in change. We could do nothing wrong. We have the tech revolution, which is so deep now in our country that it's hard to explain. You just turn on your television, there's another amazing thing that somebody is doing. And the spirit of innovation and growth and momentum was really astonishing. Conventional wisdom in finance never holds for very long. And you always have to be alert, for these types of changes. What does it mean? How is it going to impact that country or that industry? And we've moved into an area of change. It's good that you come to an investment conference, because if you stay home and don't pay attention, who the hell knows what's going to happen? I mean, it's really an incredibly dynamic time, and for those of us who are used to change, this doesn't freak us out. For those of you who are not used to change, it's a little disconcerting because you can feel, the tectonic plates starting to move around, which is always uncomfortable unless you're in an airplane.
Okay. No, Steve, thank you so much for that. I think conventional wisdom talks about the opportunities you get when things are volatile. And from what I hear, there are these pockets of opportunities that exist in today's environment. And that's probably the reason why your recent fund has collected close to $6 billion. And there's a whole bunch of clients very keen to capture these opportunities, moving away from public markets and investing in private markets. So thank you so much for that insight. You mentioned something about artificial intelligence, and that's now become like a crypto in terms of many people firstly are talking about it. Some have invested in it and fully don't understand it still, and the other half are still convinced that it's going to change the world. How do you view AI's impact on the business of investing, and are there any specific sectors where you see it creating most value for investors?
Well, AI is new for most people, starting with ChatGPT, where you realize you actually could send a clever birthday card without writing it yourself. That was like some kind of infinitesimally small appetizer for the main meal. I've been involved with AI since 2015. And at that point, hardly anybody knew what was going on, including me. I found out from Jack Ma, because we're on a board together in China, and we were going to see one of the leaders of China. So they put us all on buses, so for security purposes, and it was raining, and I'll give you a very quick lesson that you never know what the heck's going to happen in life. So I was sitting at that seat right behind the bus driver, and not that I'm that tall, but I don't like being sort of squished in on bus seats. And Jack, who's shorter than I am by a bunch, he sort of came up the stairs, and he decided he wanted to sit in the same seat next to me. So we ended up spending an hour and a half wandering around Beijing in the rain. And he started talking about artificial intelligence. And I had never heard anything about artificial intelligence. In fact, I never heard the word. He described what was going to happen in the future, and it was so exciting. I couldn't believe it. I mean, sort of 3 times faster drug development, approvals and pipeline, and huge breakthroughs in individual education, which could affect a country, particularly like India, where you have a lot of people who don't have good education and don't have financial resources. All you need is a smartphone. And at some point, there'll be individual programming just for you, so you can learn. Anyhow, I talked to the president of MIT, who was a friend of mine, who said Jack was underestimating significantly what was going to happen. And I said, how do you know? He said, well, that's because we invented artificial intelligence at MIT. So everybody you're going to meet for the next few years who talks about this will either have gone to MIT or was taught by somebody who went to MIT. So I've been involved in this for, since then, and I've met most of the people who are at the cutting edge of this technology. And these people are really smart, and they are really energetic, and they are all in on what they're doing. because they're aware that they're the leaders of a profound societal changing revolution. And they're careful about it. They understand what the dangers of this could be. But, you know, when you try to think about AI, here's a simple model. A really smart human being has an IQ of 180 to 200. By the time AI hits its full potential, it'll have the IQ of the equivalent of a human. That's 12,000.
My God.
So imagine sitting in the desk next to you is somebody who's got an IQ of 12,000. Make pretend he works for you. Would you be happy or sad? As long as you're not working for him. Right? And that's what AI is. And when you say, well, I don't know what it's going to do, well, you don't know what any human would do either, right? Until you task it to do something. You know, I was with somebody 2 nights ago for dinner who's really involved with this, one of the top people in the world. And some of the tales that he was telling are just, they're hard to believe. And so let's say we don't believe them all. Just believe 2/3, believe half, believe any percentage. And this is gonna like have profound effects on companies, investing, all white collar research. I mean, instead of having somebody do research for you on something that would take them weeks, you get it in less than 5 minutes. I mean, there's going to be enormous change over time in the management of companies. There'll be certain, functions that'll be just completely automated. They'll be using AI to help enhance revenue with interesting ideas. You'll have all kinds of crazy issues, of AI imitating human behavior. I just saw that there was 75,000, songs that AI has written that basically were mimicking somebody's voice, but with enough different that, you sort of got where they were going, and, they threw it off of some Sony music system. And there'll be issues with AI on, sort of difficulties. One will be involving criminals. Criminals are, for the most part, not smart, right? They're not splitting the atom, and that's why they get caught, because they're not smart. Imagine criminals using mature AI. They don't have to be stupid anymore. That's a bad outcome, right? Rogue states using the power of AI is a very bad outcome compared to the way the world is today. So there are a lot of ethical issues and so forth. But AI today is like when Albert Einstein, Thomas Edison decided he was going to invent a use for electricity, and he thought the light bulb was what to do, and so he made a tragic mistake. He decided to use direct current instead of alternating current. So when he had a light bulb, it could only, electricity could only go a few hundred yards. So he couldn't develop anything with it. He patented it. Then there was another guy named George Westinghouse, and he hired a guy, it's an Italian guy, sort of spooky, weird guy named Tesla, who decided that alternating current would be the way to go. And so these two titans ended up suing each other for years, and finally Edison's investors had enough of him. They forced him out of the business. They merged with Westinghouse and used Tesla's alternating current and electrified the United States. When they started building out the electric grid, people thought it would only be used for electric light bulbs, and Westinghouse's were actually better than Edison's. But now, what do we use electricity for? The answer is everything. Televisions, radios, washing machines, air conditioners, every appliance you can imagine. Sort of couldn't have an airport without electricity, every device, and nobody knew. And that's where we are now with AI. Okay? And when people say, well, it's not happening so fast, and I don't have a return, and this and that, that's all going to work. And it's all to be invented and discovered, and it's just starting. And it'll happen slower than the breakthroughs that get you to 12,000. But looking around at the age of the people in this room, there's a high probability that 95% of you will experience this thing for real. Next 10 years, the slowest part won't be developing the applications. It'll be building the data centers, because you can't have AI without data centers. And it takes longer to build that stuff, get permitted, have the supply chain stand up. But within 10 years, one of my friends who's won a Nobel Prize in this area told me in 5 years, we're going to have artificial general intelligence, which is a step function above anything we were currently thinking. 5 years, 7 years, that's nothing. So strap yourself in, because it's not just for your grandchildren or your children. It's going to be very exciting. And there are all kinds of opportunities that come from this investment-wise. Probably the biggest is the shortage of electricity, because the data centers eat so much power that most of the developed world where they put these things will be theoretically out of electricity in 4 to 5 years. That's like, what? Now, that will change somewhat as a function of whether they can design new semiconductors that don't use as much energy. But the fact that you can even say out loud that you could run out of electricity is like pretty scary, which will create enormous investment opportunities to solve that problem. And every government that's involved with AI is now in sort of a crisis mode regarding what are they going to do with their electric grid, how are they going to build it out, what are the alternatives. So the whole energy transition debate is going on steroids. And for us, it's so exciting because we can buy suppliers to the electric grid. I mean, the place, it hasn't grown in 20 years, and all of a sudden it's going to be like that. And nobody who works with electricity, except in a place where China, where they keep building this all the time, really is prepared for this. So that's a long answer for you, but I want to make sure you at least understand what's going to happen. Okay.
So clearly, it'll have an effect on certain types of jobs, and it'll also improve efficiency. But you're saying the single for AI are going to use so much of power that most countries will face shortage, and that could be a single biggest opportunity.
Yeah, we're buying utilities,
right?
We're buying parts of utilities. We're buying all the suppliers to the electric grid. Natural gas is going to become much more popular because that's the only way of really generating power.
Right.
It's not clean,
Right.
but it's the cleanest fossil fuel you're going to have, and then that's going to, create potentially new pipelines, all kinds of stuff. So whenever you need new stuff and everybody else doesn't know you need it, you can buy things that will really benefit.
See, Blackstone has been a major player in India. So coming to India, it's been a major player here. What excites you about India's growth story, and where do you see the maximum opportunity in India? Well, next big opportunity in India.
Yeah, it's funny when you go to what for us is a foreign country, you sometimes see it more clearly than the people in it. And it's the same way when people look at the United States.
That's true. That's true.
I started out meeting one of the government officials from India. I forget who he was. He was at the Council for Foreign Relations. It was sometimes in the mid '90s, he said to me, my country is going to grow at extremely rapid rate. I said, well, like, what's that? He said, we're growing at 10% now. And I'm sort of looking at this guy, really? And he said, we're going to keep that up for a very long period of time. We will be one of the great miracles of the modern economy. So when somebody tells you something like that, I forget whether he was finance minister, or he was some kind of minister. You basically, in my job, my world, somebody says something like that, you either think they're crazy or you think they know something you don't know. And you don't assume they're crazy. You want to see if they know something. And so I started looking into it, and I read a little about India, and I said, geez, India wasn't so good in the past, socialist, controlled economy, sort of really not open, but it was really changing. And you look at where it is now compared to where it was in 1995, and it's like a miracle. And you're a country that's, you're growing at 6.5 now. If the government wanted you to grow a little faster, they probably could engineer that, with interest rates and different regulations. But for population of your size, wow. And you have a young population, and you're about the only major country that's actually growing its population without immigration. I mean, you must have a fun life here with all these children. I don't know. I figured you just didn't have cable TV, so you had nothing else to do at night. But in any case, that ends up being a real asset. To have a young population like you do, and you have a good government, central government, compared to some other versions of your central government. Still could be better and improved, but you have a stable government, a rule of law, and so you have the preconditions for long-term growth. You don't have like an excessive pile of bad loans, bad credits, and so you're poised to go on for a very long time. You still only have $3,000 GDP per capita. That is really low, really low. And so the ability to move up in that scale with the multiplier effect of so many people you have in that kind of low income world, and none of this happens, in a short term, but you have the potential to have that happen. And when that starts happening, then growth rates will stay high. So we're very bullish on India, and have been since we entered 20 years ago. So this is Blackstone's 20th anniversary in India. And when we started, we announced a $1 billion potential investment, which at the time, I think shocked people, because nobody else ever said they'd do that. And that's because they probably were smart. We weren't so smart. We thought that was a good idea, so why not tell people about it? Now, in 20 years, in the first 5, we weren't much good. It took us 5 years to figure out how to really make things work here, because it's complicated. We're now the largest foreign business in India. We're the largest real estate investor in the country. We have, our private equity business is the number one in the country. Our returns for investing here are our best returns in the entire world. And you live here, right? You're pretty lucky people, right? If we could blow into town and have just astonishing results from building businesses and making them better, investing in them, you do the same things. That's why you're sitting there and have enough surplus money to help Rakesh himself have a good life, right? and so we're part of the community here, and it's very exciting for us to be here, and we're going to bring other parts of Blackstone to invest here, not just our real estate and private equity businesses. So we're going to be a lot bigger. Bigger isn't necessarily better, but it is in this case, because each of our verticals that we're going to bring here, our separate business lines, will get right-sized. So we may be a bunch bigger, but each of our businesses will be in their own comfort zone to generate really good returns, because size can be the enemy of good returns. unless you learn how to handle that and harvest the data from it and see new paradigms so you know where to be when other people don't. And you only know that by being able to have a flow of information where you can see discordant pieces of information. The human beings, I've learned in the investment business, if they're making money and they're doing well, and you tell them something that's inconsistent with that happening in the future, they absolutely will never listen to you. One, it ruins a good thing. Secondly, they don't see what you're talking about, so that means it doesn't exist. But we know that one piece of inconsistent data that would invalidate a thesis tells you that the world is changing, and you better figure out what that change is. And sometimes you have to wait for a second piece of data. Two pieces, that's like a straight line, all right? You can't screw it up with three pieces of information. And you can even tell other people, and they won't change. They're just dedicated to being in their comfort zone. As investors, I would tell you, there is no comfort zone. You're in the real world. You have to always be looking and saying, what's changing? Where should I be? Where is there danger? Which is being out of touch with what's actually happening. And you can turn this into a fabulous advantage, because if you know what's happening before everybody else, you can either get out of some things that are going to get hurt in that new world, or you can go into other areas, or you can follow that same insight into other countries. Because when we looked at home shopping around 2011, 2012, it was happening in two places in the world, China and the US. So we looked at that and we said, okay, what should we be doing since we're not retailers? We're, sort of technicians, technologists. So we said, okay, well, why don't we buy warehouses? Because they need warehouses to ship their goods. So we bought them in China. We bought them in the United States. And then we said, this home shopping is going to go everywhere for the same exact reasons. People like to be at home. They don't like to wait to have their packages wrapped, whatever it is. So we started buying warehouses all over the world. They were dirt cheap. Nobody cared about a warehouse. And we ended up being the largest owner of warehouses in the world. And then home shopping went all over the world, and the price of warehouses skyrocketed. The lease costs skyrocketed, and we made a fortune. Meanwhile, other people were buying office buildings, and we sold all our office buildings, basically, 2% left. So when office buildings collapsed after the pandemic, everybody who competes with us, or everybody who's silly enough not to invest with us, got buried, right? Our investors didn't get buried. Why would they get buried? So then we started doing warehouses and put that in, right? So that became the best asset class. And how did we know about that? Because we knew about that. And nobody else in real estate was doing pretty much anything about it. So to be successful, you have to have this knowledge base of what's changing in the world. So I give that to you because that's what we're good at. I wish I were smarter, that I wouldn't need this whole apparatus to tell me this stuff. But if I could sit someplace and see all this data, steady feed every week, then I can masquerade as a smart person, right? And I see stuff. And you can do that too, but it's hard. You need, sort of an organization like ours or yours to be able to do this. It's hard to do on your own, thinking great thoughts, in your library. I've never been a great thought person, just sitting alone. I need the real information.
Thank you. So a little bit on your leadership philosophy, Steve, since you've built such a successful organization. You've led Blackstone now for decades. What leadership principles have been most critical for your success?
Yeah, well, with a lot of things I've learned, over 40 years. I used to be a deal person. I still am. But in the deal business, it's a zero-sum game. If you're negotiating with somebody, you basically want everything to go your way. And there's only one place it could come from, which is the other person. So that was my training. I enjoyed that. So I had to learn how to manage something. And I learned a lot of lessons. When you're managing people, you can't be harsh. You can never raise your voice. You have to treat everyone and articulate it, that everyone is as valuable as every other person in the organization. In fact, the younger people tend to test better. They're smarter than the older people. And I tell them that the only difference between them and somebody who's older in a supervisory position is the older people, just through the accident of fate, just have a little more, they have more data. They're not smarter. So we treat everyone as if they're like a partner. And we share information with everybody, other than the most sensitive personnel type information. And we do it every week so that everybody feels that they're included in the business, and are worthy, and they're just not working. I've learned you have to have a vision for your business that everybody buys into, because nobody just wants to go to work. They want to be part of something. I tell people that at Blackstone, we're not a business. We're a mission to be the best in the world at whatever we choose to do. We don't have to do everything everybody else does. We just have to do things we think are worth doing. And that's our standard. And that way, you can measure where you stand. Because if there's anybody better than you, then you have to improve. And if you are better than everybody else, you won't stay there very long, because there are a bunch of other people who want to replace you. So you can never be at peace. It's just not part of, sort of excelling. And we tell people that we believe in excellence in all we do. We believe in meritocracy, so that if you're good, you get ahead. That's the only thing. We tell our people we don't believe in glass ceilings, and that's one reason we keep expanding, because in a glass ceiling environment, you have to kill the person above you to get promoted, or at least kill the person to your right or left. And we don't believe in that. And that is a firing offense, internal politics. Don't believe in it. You don't need it. You're not going to get lost. You will be discovered because we monitor everybody very closely. And so people feel secure at the firm because they should. We only hire nice people because in finance, there's always the occasional odd person who happens to be brilliant, but they are nasty. They are weird. And anybody who's worked in any financial organization knows exactly what I'm talking about. So you can't walk by that person's office because they have this bad aura, right? Like they're going to come out and do something bad to you, or they're going to yell at you, or they're going to look at you weird, or they're going to ask you something that's inappropriate. And so what happens, you end up completely avoiding these people. So we believe in a team, and you can't have anybody on your team who's a weirdo. So the job of what we do is to make sure we don't hire any weirdos. And we hire great people, but they have to be nice people. And that way, when we hire people from the outside as partners, I like to talk to them a few months in, because they'll know more about our firm than I will, right? Because they're out among people that I don't deal with on a regular basis. So they always say the same thing. They said, I can't believe I didn't work here for my career. And I said, why do you feel that way? They said, everybody's so nice here. And they all want me to succeed. I said, well, why would they not want you to succeed? I said, we hired you so you'll succeed. They said, well, you didn't work like I did at all these amazing, prestigious companies. And they say, it's not like that anywhere else. He said, people hope you fail so they get ahead. I said, well, that must be sort of distressing. They said, well, you just get used to it. They said, this is so liberating. And I said, well, geez, I think it's normal. They said, I got a clue for you. It's not normal. And we get that from everybody. So that's part of how you manage. What are those secrets? The other is don't do small things. And the reason you don't want to do small things is because they take as much management time and effort as big things. So don't go into products that can't be huge, areas that can't be really big, and take your best people when you're starting something or going into a new area, and those people have to do it. Because even though you think you're smart and you know what you're doing, you actually don't. So the only people who can figure that out are your best people. What businesses normally do when they have something new, they pick somebody who's a really good B to B plus, because they can't afford to remove the A from what they're doing because it's too critical. So you send a B to do the work you need to be an A plus, and what happens? It's a disappointment. Or if they're really gifted, they'll completely screw it up, right? And it happens every time. So if the only way you can afford to put an A into something new is if it's really worth it. It's got to be big. It's got to be easy to make it work. Because when you think it's going to be easy, that just means it's possible. It's never easy. It's never easy. So you have to always put your best people on that. And if you follow these kinds of like simple rules, never go into a business in finance that can't turn instantly profitable. And the reason is finance moves around so much that if you're one of these people who says, well, I'll take 4 years to break even, in 4 years, the opportunity will be changed, gone. You know, you have to hit it right when you see it. And when you see it, you don't need consultants to tell you you're seeing the truth. You know when it's the truth, and you don't hesitate, and you just throw people at it, and you don't sleep until you can get it stood up and make it happen. So this is how you go from 400,000 of capital and turn it into 240 billion. I mean, you know, it's not an accident. You didn't get lucky once. I wish you could get lucky once. How wonderful would that be, right? You have to get lucky so many times because it's not luck. And you need a system. You have to know when there's a paradigm shift, and you have to believe what you're seeing and not wait, because you'll be the first on your block, and it's easier to get success when nobody else is competing with you. They will compete with you later, right? But being a first mover, you'll always have great investment results if you're where something's breaking. So those are a longer explanation of
Right.
what have I learned. I learned there aren't that many 10s on a scale of 10 as people. And when you get one, it actually doesn't matter what you pay them. There are no rules, because what would you pay Michael Jordan to play basketball for you if you liked winning championships and having the most entertaining team because the guy was a genius? What would you pay Michael Jordan? So regular people were getting X. What would you pay him? I have no idea. But I just know I want him. And whatever I pay him to do that, you'll have championships. And if you care about championships, not everybody does. You know, take any sports league, there's some teams that always suck, right? We have 2 of them in New York. They like never win. Why do people own teams like that? They never win. You know, so if you want to win, you have to have a remarkable person in charge of that area that you're going into. And that's a rule you should not violate. You don't win with second-tier talent, no matter how much they want to win. It's just every sport is the same. Second-tier talent doesn't win, no matter who the coach is. But get some superstars, they will win. And that's what you need in business.
Thanks, Steve. Those are great insights. I think a couple of things you mentioned. One, we always looking out for change that's taking place at a rapid pace and have enough time to think about how it's going to affect your business. Second, you mentioned about people getting the best and also doing things which are worth it in terms of scale and size, and put your best people behind it. And third, you mentioned hiring good people, nice people, and having an environment that inspires people to work and do better. This room is full of successful entrepreneurs who themselves have created wealth. Any sort of last thoughts that you'd like to give about the common traits you've seen amongst the ones who consistently create and sustain wealth? Any other traits that you've seen? Because you interact with so many entrepreneurs and leaders.
All of these companies is our job is to make them grow faster. It's a fun thing because before we buy something, we actually study it in depth and we have a plan. This isn't, hope is not a plan, right? When you buy public stocks, hope is a plan. That's all you have. You hope it goes up. I don't blame you. There is nothing else you can rely on. And if it doesn't work, you sell it at a loss and you say, I'll get them the next time. When we put together the offering document for this thing, I know we are very risk averse as a firm because I lost money for us on our third investment. I was untrained and it was such an embarrassing thing that I vowed we're never going to lose money. And that's the primary screen through which we look at things. And then, of course, there's an upside of making a bunch of money. So we put this offering document together, and I asked one of our people, I said, in how many deals did we lose money in our private equity business? Because if you read articles, they tell you how risky private equity is. I don't know who writes these articles. They're certainly not the people who work in the business compared to public company investing. In public company investing, if you get 60% of your decisions right, you're a really good investor. I don't have the psychological makeup to lose that much. That often, I hate losing. It's almost pathological with me. So I just want to win. So the only way you can win is have complete access to a company. You sign a non-disclosure agreement so you get everything. You analyze it, then you sit down with the people who are running the company and say, if you weren't public or you weren't owned by who you are and you had unlimited money, what would you do to make this great? And they stop for a second and they go, really? I could do anything to make it great? And they come out with a whole list of things. And you say, why didn't these people do this stuff? And there's always a reason. The owner didn't want to put up the money. You know, the owner's son, you know, he doesn't like it. Whatever it is. I mean, there's always some long laundry list of unfortunate reasons why they can't activate it. So you don't even need outside people. The inside people could almost tell you a lot of what you do. And then we happen to have experts within the firm who are great at sitting down and figuring out how can we make something better. When I started the firm 40 years ago, there were less than 1% of institutions that invested in private equity. Now it's 25%. 25% is like really a lot. So these people all believe what I'm telling you. The reason they believe it is they've had 40 years to sort of audit what's going on here. And for the highest performing investors who tend in the US to be the endowments of the big universities, they're 50% in alternatives. Most individuals are next to nothing. So we're trying to revolutionize investing by individuals because we think, why shouldn't they make what the institutions make? There's no reason other than somebody didn't offer it to you or you didn't understand it or it wasn't high quality or you needed 100% liquidity. You do not need if you're an affluent person, 100% liquidity. That's some kind of oddity that you were taught that you don't need. I mean, there's a layer of money. You're not going to liquidate everything you have because you're too conservative, right? To get yourself in kind of trouble where everything has to be liquid. I mean, that's sort of pretty bizarre to be in that situation. And you get liquidity through our thing anyhow. So we put this into a fund, and I think we're going to do very well because it's just a slice of almost everything that we do. So I recommend this to you because we think it's really good. And anytime you can sell close to $8 billion in a little over a year, you have managed to convince other people that it's a good thing to do because they know something and they didn't make the decision on one day. You know, it's been all during that period. So I couldn't finish without a commercial. Because we didn't go from no assets to $1.1 trillion without asking for an order. So we're just like all of you, right? No different, no shame. Just we think it's good, and you know we have over 75 separate products, probably closer to 80 now, and the vast majority have done really well. And that's also how you become the biggest in the world. You know, it's a vote on you every day. You know, how are you doing for me? And if you're doing well, give you more money. Why not? I mean, the only reason you're investing is to make money. I mean, you get a little bit of charm here, but it doesn't count, right? It's really just the numbers.
Thank you so much, Steve, for your insights and so many learnings that you shared with all of us and taking time out to be with us today.